if you take the M2 growth, the chart I showed you where they're printing 7% a year since 1961, if you just take that out of the S&P, so like, okay, the S&P went up 8%, but they printed 7%. So really only went up 1%, like because they stole 7% of the wealth. So like, if you look here, it's almost flat over like 100 years. You only made the dividends, which is like 1.5%. So you think you're getting 7 or 8% because the number's going up, but all the prices are going up too. So like, you really are only making 1.5%.
You're getting compounded.
Yeah, it's like, yeah, you're pouring money. You're trying to fill the cup. You're pouring in, and you think, oh, the cup's gonna fill up because I'm pouring like this much per year, but then it's leaking out at the same time. Another thing that makes gold kind of not as good as Bitcoin, it produces violence. Because when you have a lot of gold, it incentivizes people to come kill you and take it. So I'll just list a couple of examples. Like in ancient history, Alexander the Great, he gallivanted across the world. I'm stealing this from Michael Saylor as well because I learned it from him. He gallivanted across the world and he stole all the gold everywhere, right? The Roman Empire, led by Titus, sacked Jerusalem, stole their gold. Rome, led by a bunch of kings, they're known to have 1,000 sieges where they stole gold from everyone. With paper money, when the country runs out of money, they print money and they borrow it from the kids, even though the kids don't even pay taxes yet. And then when they run out of that money, they keep fighting, they print money and they borrow from the grandkids to keep fighting. And millions of people are dying. So like, if you didn't have the ability to print, you could not have world wars. So Bitcoin fixes this. So it's just like, it's the opposite. It doesn't create new problems. It solves all these problems that people don't even understand they have. The health problems. Things keep getting more expensive. Instead of marking the prices up, they put in cheap, seed oils, whatever, to make you unhealthy. I mean, it's not to make you unhealthy. It's just because if they marked it to the real price, nobody could afford it. So if we stop doing that, maybe we could have healthy food again. It would solve the health crisis.
One thing I was always curious is we've lived in a world where we're so used to centralized powers, and we have something like Bitcoin that's decentralized. This is something very new. Can they coincide? Will decentralization take over?
We're social creatures, so I'm not like saying everything should be decentralized, but just the money needs to be decentralized because money is power, and if you give it to a central authority, they're gonna be corrupted.
All right. I don't know anything about Bitcoin. I did some research, and from what I can tell you, it makes a lot of sense. So let's get started with what is Bitcoin. When it started, I believe it started in 2009.
Correct, 2009.
And who was the individual that introduced it?
Satoshi Nakamoto.
So Satoshi Nakamoto. I mean, rumor has it like this guy has never been identified, right? What's the narrative there? What can we say about that? About this guy?
We have absolutely no clue who this guy is, whether it's a guy, whether it's a group of people. And that's the most important part about Bitcoin, is that we don't know who it is. We don't want to know who it is.
It could be a pseudonym, is what he's saying. It could be one guy. It could be a group of programmers. My best guess is it's probably one guy, just based on the emails that we do have from him. At some point, he cut off. He was when they were designing Bitcoin, they were on a forum together. Him and a bunch of cyberpunks, a bunch of crypto enthusiasts, and what kind of spurred them to do it was the bailouts, the banking bailouts of 2009. So they were upset that the bankers were getting bailed out, and they kept gambling with everybody's money. And it's like, heads, they win, tails, you lose. Because when they lose, everybody just prints the money from our money and gives it back to them, and they get to start again. So even in the Genesis block of Bitcoin, there's a message in the first block that was ever mined, and it says, "The Times, January 3rd, 2009, Chancellor on the brink of a second bailout for banks." And that's the first Genesis block. After that, the next block wasn't mined until at least 2 people were on the network. So even Satoshi himself never mined a block alone. And it's just kind of like a shared ledger. to free humanity from debt enslavement. Basically, it's kind of like a tool for personal sovereignty.
Right.
Yeah.
And you guys know I'm all about independence, and that's basically what Bitcoin is. And I think at the time when it got released, I think it was priced at like 30 cents a coin, right?
It had no price. Initially, it was just traded and mined amongst the cyberpunks. They're testing out all the kinks. There was one bug that they found, and they changed the code a tiny bit. But then there's a famous day. I don't remember the exact date. I think it's sometime in March and April. It was monetized for the first time when somebody bought some pizzas with Bitcoin. It was the most expensive pizza ever. It was like 20,000 or 30,000 Bitcoin. So that's like, I don't know, a lot of money today. And we celebrate that. Bitcoiners celebrate Pizza Day as the first time it was monetized. Yeah.
And I think Bitcoin today is at like 60, 65K around there.
69,000, just over.
Oh, wow.
Yeah.
So some would say that Bitcoin is like the best asset ever created.
I would say that.
100%. The properties that Bitcoin has is just not compared to any other currency or money out there.
I think in order to understand a little bit more about what Bitcoin is, we need to get into what is money, right?
Yeah.
What is money? We really have to understand what money is, and a lot of people don't understand what it is. Can we talk about that?
Oh, with pleasure, with pleasure. So like the thing that taught me most about money was the Bitcoin Standard, probably the book by Safedin Amos. He's a world-renowned author, and he also speaks on podcasts. That you should check him out, Safedin. But money is a technology that humans discovered at some point. And I think Bitcoin is the first real money we've ever had. We've had the idea of money and we've strived towards money. We had close approximations. But basically, money allows us to specialize. Okay, so before we had money, we had to barter. And there was a problem called the coincidence of wants. You have apples, he has bananas, I have oranges. And I want your apples, but you only want bananas. So now to get your apples, I need to trade him oranges to get bananas to trade with you to get the apple. And then the more complex society becomes, it becomes impossible for you to get what you want, or there's a lot of slippage when you trade. You need to like give more than you want, or things go bad. So we invented money to be able to be a specialist and just have this good that I know everyone's going to want this because this buys everything. It's the most saleable over time. I could sell it whenever I want and I could get the goods that I want. I give you money, you give me the goods. So then now we could all, I could be a painter, I could be an engineer, I could be whatever. Without that, we couldn't have built society, basically. So money is a technology that allows us to specialize. And then through the years, we've had all kinds of money. Now, or you could call them capital, you could call it, right? So Safedin brought up this example once. I really like it. The first capital good was probably like a spear or a fishing rod. Okay, so like when we first used to save for the future, we would just we would invest our time in, let's say, fishing. Let's just say, okay, and you would like just try to find a fish and catch it in the water, and it would take you all day. And then some really smart human designed a fishing rod, let's say. And he had to not fish for a few days while he was designing it. He had to invest for the future and kind of design this thing, trial and error. And he came up with the fishing rod. And once he had the fishing rod, it allowed him to catch 10 fish a day instead of one. And now he could grow his wealth with that thing, right? So then, once he had enough fish to eat for as much as he wanted, maybe he started building more rods and saying, I could save these, and in the future I could trade this for something that I want. So maybe that was the first capital good or whatever. So eventually, though, he figured out, hey, once I have like 20, I don't know, 1,000 rods, there isn't enough people in the village. They don't want 20 rods each. Like, so I've reached, this is not a good savings technology because, you know, I can only make so many, and then eventually I might be sitting on these forever. Like nobody's going to buy it after a certain amount. So like we found gold basically. Humans, to make the story the story a little short. Eventually, uh, we've used salt, we've used seashells, we've used limestone on the islands of Yap, but typically we ended up with a good that was very hard to make because it was durable and it was hard to make. Because if it was easy to make, it wouldn't be stable, and people would just go make more of it. If that became the money and it was easy to make, more people would make more of it. There would be inflation. It would wreck the trading between people would not be efficient. Yeah. So I know it's a lot to take in. I'm trying to like condense all of human history into
I
like
understand. And you never want to be in a position to where you have so much supply of something and no demand for it.
yeah.
You never want to be there with whatever it is that you have. So let's talk about Bitcoin and let's get more again into the basics of it. How much Bitcoin is there?
Only 21 million. At the moment, I think 21 million at the year 2140.
Yeah, that's what there will be in the year
That's the
2140.
cap. That's as much.
That's the cap.
That's how much Bitcoin there could ever exist.
Yeah, but right now there's about 19 point something million, 19.5. About 90 or 93% has been mined already.
93% has been mined.
Yeah, so from here to 2140, the rest of the 7% has been mined. So Satoshi designed this in a genius way where the reward, like the way it's issued, is cut in half every 4 years. And this was to make the reward earlier in the early build out of the network. The people they're taking on more risk by building out the network, so they were rewarded higher. They had to face way bigger challenges. There wasn't infrastructure. There was a lot more uncertainty. So the rewards were higher. And also it was worth less. But as more and more the network grows, the reward gets smaller and smaller. And over time, it goes down to zero, basically.
Right. I don't want to backtrack, but do we want to get into what hard money is versus soft?
Yes, that's a great question.
I feel like a lot of people, that's probably their first time hearing it. They're like, what do you mean soft money, hard money? Like, right? Like, what is that?
So when we say hard money, we mean the money with the lowest or highest, stock to flow. So let's just take gold as an example versus silver, right? In all of human history, gold, the supply, all the gold that's ever been mined is probably still with us because it doesn't go bad. So there's this big stack of gold, and people do still mine it. But because the stack is so enormous and we've been mining it for thousands of years, even if you mine all the gold that you can with our technology today, you only increase the supply by about 1.5%. So that means that the stock is way higher than the flow. And even if we wanted to, the inflation cannot be high in gold because it's just so hard to find. So that's hard money. It's a hard money. Whereas silver, as a money, you can mine about 40% of the entire supply in 1 year. It's an industrial. Let's not get into the fact that a lot of it is used and consumed, but just as an example versus gold, it's much easier to add to the supply. So it makes a worse money because you could have such a big inflation in it. And if the price goes up, it incentivizes people to mine even more. So with Bitcoin, it's the hardest money we've ever created, humanity. It's perfectly hard. It's the only asset, and this is including all the altcoins. Like altcoins cannot claim this. It's the only thing humans have ever had where it's an enforceable limited supply. So like people would say, well, oh, it's a Beanie Baby, like they're limited. But if Beanie Baby prices went up to 10,000, the creator can make more.
Right.
With Bitcoin, it doesn't matter how high the price goes. The supply is locked in by math. Yeah, so that's what hard money is versus soft money. And sadly, like the dollar is very soft money because it's so easy for them to create. At a push of a button, they can create it. It's softer than anything. It's paper money.
I think during COVID, we printed a lot of money.
A lot of money. And they were giving money out for free.
Yeah, yeah. It's pretty insane the amount they printed. I think it was about 6 trillion. When we use it, we're expressing what we want to manifest in the world. So when you spend money, when you buy um, a Subaru instead of a Mercedes, and you take that extra money and you take your kid to soccer practice, you're telling the economy, like the free market, we want more coaches and more like recreational sports for our youth. We want more affordable cars as opposed to these expensive cars or whatever, right? That's just an example. Or if you buy bananas versus buying, I don't know, oranges. I don't like oranges, so I buy bananas. I'm telling, hey, the world, produce more bananas and make them cheaper because that's what I want to manifest in this reality. So when they printed $6 trillion, and this is kind of why Satoshi even made this and why they were so angry in 2009. The average American makes $2 million in his lifetime. And most of them spend most of that money. Some of them have a little left over and they give it to their kids. But in that lifetime, they made millions of decisions to manifest the world to becoming what they want it to become. And by printing $6 trillion, if you divide 6 trillion by 2 million, that's 3 million lives erased. All of the economic decisions of 3 million Americans in a click of a button were erased. And they're like, we don't care about your decisions of the world. You want to manifest? Let's give these bankers money. And that's why I'm so passionate about Bitcoin, because it's finally giving us a way out of this world where it doesn't matter what we do, how we vote, where we put our money. They could just click a button and undo all of our effort. So
That's terrible. Yeah. I think more people need to understand that Bitcoin really is true independence when it comes to money.
yeah, and it's not a get rich quick. It's not going to you're not going to buy it and become a millionaire and get a Lambo and go on Reddit and show off, right? All it is I don't know if you, when you were a kid, if you ever like had this experience, but sometimes I'd go play with the bigger kids and they would cheat, or they would, I would play basketball, they would travel, or I would call a foul and they'd be like, nah, that's not a foul. And it's a rigged game and you can't win. And the only way to win is to take your ball and play somewhere else. So that's what Bitcoin is. It's not going to make you rich quick, but if you save in Bitcoin instead of in dollars, they can't steal your money. They cannot steal your life force.
Right. Right. So let's say I buy Bitcoin.
Mm-hmm.
Where does it go? Like where is it?
So all Bitcoins are on a ledger, like a shared ledger. So I'll put it like this. When you have Bitcoin, you don't have it, right? It's just on the ledger. There's 20 million coins. Right now there's 19.5, right? So let's just say on coin number 1, Maxi owns this coin, right? Coin number 2, Jay owns coin number 2, right? And now if I want to get a haircut and pay you 1 Bitcoin, I'm not taking it off the ledger and giving it to you, right? All I'm doing is I'm signing with my magic pen, which is my secret key. My secret key is my magic pen. Only I can sign that. As I'm the owner of coin number 1, I can sign it. And once I sign it, I say, who am I assigning this coin to now? And I could say, coin number 1 now belongs to Jay because I'm giving it to him. And then from then on, only you can sign on that line. Nobody else can, only you who have that secret key. So that's kind of how it works. It's a shared ledger that the whole world audits every 10 minutes, and we all check that nobody, that we don't check, we update it. Like, okay, he moved his coin to here, he signed his coin over to him, he signed his coin over to him.
It's all encrypted, right?
Yeah, it's encrypted with the power of SHA-256 encryption, which is basically, it's as powerful encryption as 2 to the power 256, which is like more than there are stars in the universe. It's not hackable. It's part of the allure of Bitcoin that Satoshi's wallet with billions of dollars, he's like the 26th richest man in the world. It's out there in public. And nobody's been able to hack it for 15 years, and nobody will be able to hack it.
So you're safe. That encryption basically, guys, just means like privacy and safety.
Yeah.
So you mentioned the wallet. What is the wallet? Understanding the wallet.
Okay, so here I brought you a wallet. So it's just a digital device, right? Theoretically, you could do all of your transactions manually.
Oh, your Bitcoin's in here?
No, that's for you. You gotta start from zero and start stacking.
There you go. Oh, that's for me?
Yeah, yeah.
Oh, appreciate you, man. So my man's got me a wallet, a Bitcoin wallet. And I guess this is where we store all our Bitcoin when we.
So no, the coins are still on the ledger. That is your magic pen. So that's just basically like a key holder, right? So here's the second part of it, right? You have your seed phrase, which is 12 words. And those are the magic words that give you, once you encrypt those words, it gives you a sequence of a private key. And that's what you use to sign. That's like your magic pen, right? Now, you write it on a piece of paper, but paper doesn't last long. It could burn down. It could rip. The pen could go bad. So you also get one of these. This is a piece of steel. You carve your words into this, and you put it, somewhere. Don't tell me where you're going to put it, but I'm not going to throw this because it might injure you. But you put it like underground or in your wall or, somewhere where nobody could find it. But even if that wallet gets crushed, that is the real key. The 12 words, you could take it in your brain. Theoretically, you could just remember it and not write it down, but that's dangerous.
That's dangerous, yeah.
So the wallet is just like a key holder, and that's the master key. And you can make copies of your key and use it. And if you lose it, it's not a big deal.
And you're putting it into steel because let's say there's a fire in your house or something happens, it's still going to stay there.
Yeah, so Bitcoin maxis, most of us, we have a lot of our net worth in Bitcoin because we believe that, this is a peaceful revolution. Like, I'm not going to overthrow the government, but I'm just going to take my energy out of their system and put it in my system. And eventually they're going to bleed out and our system's going to grow and flourish.
So what's a cold wallet and a hot wallet?
So cold wallet would be something like the device you just gave you
This
now.
is a cold wallet?
Yeah. So the cold wallet is offline, unhackable, and
USB-C?
and then let me see.
And then, so this is the cold wallet.
So cold is basically like it's offline. And when you plug that device in, even if your computer has a virus, that device only goes in. Nothing comes off the computer onto the device. It only comes from the device off. It's a pen. So like when you have a pen, you're writing on the paper. Nothing goes up into the pen. It's just a pen. So that is a pen. It signs, but it cannot be hacked. It's just like a magic pen, right? So a hot wallet is when you're keeping it in Coinbase, you're keeping it online somewhere, theoretically where it could get hacked. And then they could be like, sorry, we got hacked and they stole your coins that we were holding for you. Yeah, so like you never want to hold a large amount in a hot wallet.
Yeah, they won't bail you out. And it's just you lose your money and that's it.
So you were talking about a secret code, right?
It's 12 words or 24. It's a seed phrase, and then you use the SHA encryption to turn it into 256 characters or 64. I forget which one is which. Still, even with all my years of expertise, because I use the technology. So I don't, just like the internet, right? Users of the internet, they don't need to get into TCP/IP and IPs and how data is being transferred between APIs. They just use the internet. So like once you learn the basics, and there's plenty of devices that help you out these days, you don't need to know the bottom level. You just need to know how to use it. So basically there's, I think 1,000 something words, 1,024 words, and you pick 12 of them randomly. There's a way, the device manufacturers will explain to you how to do it before you choose it. And nobody could ever, it's too much entropy. It's too many combinations.
You can't guess the code for something like this. It's just.
And a prime example is that guy that lost all of his Bitcoin, right? Because he forgot his code.
Oh my God. I don't know. There's a lot of these horror stories though.
James Howell.
What? James Howell?
James Howell from the UK. So he threw away, he put his hard drive into a garbage bag and it was tossed out. So I believe it was how many Bitcoin? 2,000?
I don't know. It's worth 1.5 billion right now.
So what about Bitcoin and inflation? Does Bitcoin get affected by inflation?
I mean, it's supposed to be a tool to avoid inflation, to get away from it. So it's not going to be exactly 1-to-1. When they print money, it goes up. It's not like that because there's delayed effects and there's macroeconomics, but it doesn't have inflation, whereas every other currency right now has inflation. So basically, let's go back to where we started. Like, we started with Satoshi or the group of programmers, whoever, they were mad about the bailout, right? Why were they mad? It's because of the Cantillon effect, Cantillionaire, right? So what you see in this graph, right, is the total net worth of the bottom 50% is the blue line, right? The red line is the net worth of the top 0.1%. So the top 10% of the 1%, right? And the green line is M2, the amount of money printed. So you could see it almost directly correlates with the money the rich people are taking out of the economy is the money that's printed. And what that is because of the Cantillionaire effect, which means when money is printed, whoever gets it first benefits the most. So they get to borrow money at 0%, and at the time, it's still worth what it's worth. And then they go buy up all the productive assets. They buy up all the houses, and then they just rent it back to you. And then after 5 or 10 years, inflation is like slow to kick in. Everything is more expensive, but they got the money when it was worth what it was worth. And they just keep doing this in cycles. And like every time, once they spend all their money on Lamborghinis, they just print a new set. Like there's a crisis. They're like, we have to print the money or everything's going to be bad. Give us money. And then they just buy up all the assets again with that money they just printed. And then they rent it back to you. It's like slavery. So that's kind of the problem with inflation, is that the people that print it give it to their friends and the powerful people first. We get it last when it's worth nothing. And they rig the game like this.
It's essentially an extra tax on top of your taxes. They're literally just taking extra money from you.
They will tell you inflation is caused by Taylor Swift. Literally, if you're watching this, Google Taylor Swift inflation. There's articles and Beyonce inflation, and they'll say it's blamed on her concerts. They'll say it's blamed on supply chain or greedy corporations, but it's just because they're printing money. It's just a distraction, right? So this chart I'm looking at here is the net change in money supply each year since 1960. They tell you inflation is a basket of goods. It's the price of a TV, which is going down, so inflation's going down, blah, blah, blah. But if you look at the chart, look how much money they printed each year. Is it ever 2%? It's never 2%. It's always 13, 7, 5, whatever. I believe the average is something like 6 or 7% a year if you average all these out. But it's pretty freaking high. And then look at 2020, 25%. In 1 year, they stole a quarter of the value of our money in 1 freaking year. That is, if you worked for 40 years and they just stole 10 years of your life, it's crazy. And it's,
if you accumulate all those numbers and compound,
Oh
when
my
you
God.
get to 2020,
yeah.
it's like the numbers just shot up even more. Like, it's insane.
These are the other world currencies, right? So that number I showed you with the theft, that's just the US dollar. But this is all the currencies of the world, right? And this is them just in the last 10 years versus the dollar. So besides losing those numbers that we saw, they're losing this on top of it because we export our inflation. So America's lucky. Like, it's not as bad for us because a lot of our inflation, we just send it to other countries because they have to use the dollar to buy oil and a lot of reasons. So that's how Bitcoin is tied to inflation. It solves this problem. It doesn't let them print it anymore if we use Bitcoin instead of money for savings, instead of currency, instead of these fiat currencies. That's basically the reason. So I work in tech, right? And the way I like to think about like Bitcoin is product market fit. I've worked in a startup where we have a good product and it solves a problem in the market. And then I've been at an AI startup where we made this AI and it was smart, but nobody really needed it. It wasn't solving a real problem. It was like a problem in search of a solution in search of a problem. But Bitcoin is the best product market fit humanity has ever had. There's 8 billion people that are affected by inflation that steals their life's work. There's never been a better product market fit where this actually solves a problem that we all have. So that's how it relates to inflation.
So there's a lot of market manipulation going on.
A lot.
It's like absolute power corrupts, right? If you had the power to click a button and make you and all your friends and your family billionaires, you would probably do it. Like most humans would do that. It's understandable that having that power is going to corrupt you. Over history, there's only been very few men, maybe a few good emperors of Rome before they debased their currency. But, if you get enough humans close to that button, one of them is going to click it.
So what is the government market basket?
So they use...
Essentially, it's what we're talking about, right?
They use something called CPI, which is Consumer Price Index. They put milk, gasoline, healthcare, whatever in there. And then they say, this is the actual inflation, not the money that we're printing, because some of it goes into treasury, some of it, they're saying when we print money, that's not why prices are going up, but prices are going up. And they use this number to give you cost of living adjustments. So when they pay Social Security or Medicare or different government payment systems, welfare, every year they have to raise that a little because it doesn't buy enough. And they raise it by this CPI. And that's a cost of living adjustment. But if they told you the real number, they would have to pay a lot more. And that would make them have to borrow more money. And it's expensive. So it's in their interest to kind of minimize that. You could call it manipulation. You could call it incompetence if you want to be charitable. I call it manipulation, like you. So what the government does is they just change the way it's calculated every few years because it starts getting too expensive. But like if you look at this graph here on Shadow Stats, the blue line is how they used to calculate it in 1990, and the red line is how they calculate it now. And if you go back even more, this is how they used to calculate it in 1980. So you can see it's much higher than the way they calculate it now because they just take things out of it. Like, oh, healthcare is going through the roof. Let's take it out of the basket. Let's just say TVs are in there now. TVs are getting cheap, and that makes the number go down. But we're the ones buying groceries. Like, you can't fool my eyes. Like, when I was a kid, a can of Coke was 25 cents, and now it's like $1.50. Like,
so they say it's like 2 or 3%. The inflation is really 7, right? Realistically,
maybe even higher than
maybe
that.
even more, right?
Yeah, if you go by this chart, if we do it by the way they calculated in 1980, it's averaging between 8 and 12%, and then in the last couple of years, it spiked to 15. When they said, "Oh, it spiked to 9, it's bad," it was really even higher.
Right. That's wild.
So they pick and choose what they want to use to measure this. So
Yeah.
they can take something out to make it seem.
It's the Matrix. They just like put stuff in front of you and hope that you buy it, like that you don't wake up from that little battery nest.
That's pretty crazy, man. So what is blockchain?
So Bitcoin is the first use case of a blockchain where it made sense. Blockchains maybe existed as when like Bitcoin is the combination of kind of a few technologies, blockchain, proof of work, and difficulty adjustment, like a few like eCash. So there's like 40 years of development, and Satoshi like combined these inventions to make the Bitcoin blockchain. Now, a blockchain is purposely inefficient. So there's really only one use case for it, which is Bitcoin or a hard money, right? There was a period of time, and we're still in this period of time to some extent, where people started putting it in everything, like in their stock, blockchain.com, Walmart had a blockchain, every like golf company, like it doesn't matter. Everyone was just, because it was a buzzword, just like AI is now. If you put that in your press release, your stock goes up. But it's actually like not a useful use case for all these things that they're putting it in. And a lot of them have taken it out already because they realize like how dumb it is. Basically, it's like we're all auditing. If we're going to have a shared money that we all agree on, there's a reason to make it less efficient to give us all a chance to audit it every 10 minutes. But if you're stocking shelves at Walmart, right, and you have a guy, an inventory clerk, and he's counting the shelf and he says, okay, I counted 10 items, and he puts that into the computer in the store, it doesn't make sense to then have 500,000 other Walmart workers come and count. You count the 10 items too. And now you come in and count the 10 items. And then
That's counterproductive.
So it's literally, we've worked for 50 years, humans. We have this thing called a SQL database, which is the most efficient, and it's called a relational database. So you don't even put everything in a flat file. You only keep the data you want in the table that you want. And if you need to go grab some other ones, you could be like, oh, reference this and go get this other data. And it's super efficient. That's what we need to use for databases. The only reason to use a blockchain is if you don't have trust. And that's why Bitcoin needs it, because Bitcoin is money for people that don't trust each other. It's money for enemies. It's going to bring peace by saying, hey, look, we might not agree, but we agree on this one thing. We're going to build a base layer on this one thing that we could all audit. We could all agree on this one thing. It's not going to be efficient because we need to audit it, but this way we know nobody's lying.
Right.
But any other use for a blockchain is kind of, if you want to be charitable, let's just say it's a misunderstanding. If you want to be like, think that they're Machiavellian, then they're just doing it to pump their stock or whatever it is, or to sell you like an altcoin and our blockchain is faster or whatever. But there's only one use case for a blockchain, and that's a cryptocurrency, which is Bitcoin.
Right. Can we get into ETFs and how they changed finance? I know ETFs got released maybe 30 years after mutual funds, right?
Mm-hmm.
Mutual funds is like very low frequency.
So mutual fund, you could ask for your money, but you have to wait for them to like sell it to someone. Whereas an exchange traded fund, an ETF, it's kind of like 1-to-1. It's more like you buy it, then they buy the thing for you. And then when you say, I want to sell it, they just sell it at the market price that day. So it moves much faster. I mean, that's more on the stock side. It's also depending on like the technology evolved to more electronic trading like they used to do it on paper and, fax people and call. And as it got faster with the internet, so that definitely helps too. Like even mutual funds are a little faster than they used to be, but the speed at which they buy the product, like if you have a mutual fund for Bitcoin, let's say, which not a great example, but I don't know, you give them money and then they buy at their discretion. They have a lot more leeway to like, the price is expensive right now, so I'm going to wait and buy it in a few days. So you have this concept of like discount to NAV, it's called, or like net asset valuation. So there might be a mutual fund for banana plantations or whatever. Like I want to invest in Chiquita banana, right? And you could give them $100 and they could be like, well, the price right now is high for land, so we're going to wait a few days, and when the price goes down, then we'll invest your money. So there could be money sitting in that mutual fund just in cash. So it's a little slower. Whereas with like a spot gold, let's say gold ETF, supposedly when you give them that $100, they have 24 hours to buy $100 in gold. Doesn't matter the price. If it's expensive, they still got to buy it. So like there's different rules between ETFs and mutual funds, basically.
When the Bitcoin ETF got released, it did great.
Mm-hmm. The best performing ever.
Best performance ever. They're saying that it's going to surpass the gold ETF.
Yeah.
How do you feel about that?
I mean, I agree, because ultimately Bitcoin it's inspired by gold to become digital gold. Like humanity has had, gold as our money for 5,000 years, and then I think the next 5,000 years will be Bitcoin. So we transact instantly. We have to be able to send value at the speed of light. You cannot send gold at the speed of light. So I think it will.
You can't even move it from country to country.
No.
So can we say it will surpass, Bitcoin ETF will surpass S&P 500?
Well, I don't know. So there's always going to be like investment, right? But the reason most normal people invest these days is because they can't save. In the past, people used to save gold, and they could just save that gold and their value would be stored in it long enough to just be like, I don't want to gamble, right? Investing is always gambling. It could be a safer gamble if you buy, a company that's established, but it's still some kind of gamble. And the reason we all gamble right now is because we've corrupted our money to the point where it doesn't work as a savings technology anymore. So a plumber has to have a side job of being an investor just to not lose the work that he's putting in. Whereas once Bitcoin becomes accepted as a store of value, then there will be less investment in like stocks and whatever, because right now they're being used as a store of value because just inflation. But once inflation is solved, you might be able to just save your money and become rich by just saving your money.
How do we move to Bitcoin?
So there's kind of layers to Bitcoin, right? So the base layer is a little slower and more expensive to transact on. Just like banking, right? When you pay your card, there's a certain amount of trust. The card is like a layer 2 or 3, but the bank, it takes like 30 days for them to actually settle the money, right? Because you could like call and be like, no, I don't want to do that. That's a fraud or whatever. It's not really settled. Bitcoin is slow. It settles every 10 minutes. If you're moving big amounts of money, you probably want to wait 5 or 6 confirmations. So 60 minutes, you're going to send $1 billion, right? But if you're going to buy a cup of coffee, you use a layer 2, which is Lightning, which is, it requires some trust with the Lightning provider or whatever. But Lightning has done more transactions last year than Visa, more volume. It's done about 19 trillion. So it's a big network, and it costs fractions of a penny to use the Lightning network. Now, the reason I tell you don't sell is because right now Bitcoin's going through a monetization phase, and I think that it's appreciating so fast that like spend your dollars, don't spend your Bitcoin. That's where I'm at. But if you have all of your dollars in Bitcoin, like some maximalists, I still get I work a full-time job, so I still get paid in dollars. I just spend the dollars and I save in Bitcoin, right? But if you do want to sell your Bitcoin, let's say you have an emergency, like you said, you can just put it on an exchange and sell it. Like the same exchange that you buy it from, they'll also sell it for you.
That's when you get taxed.
Yeah.
What is the average tax on these regular rates?
So it's like capital gains. Right now, it's considered property. I think in a few years, there's going to be enough political pressure on them to even lower those taxes because so many people own Bitcoin. But right now, if you hold it for more than a year, it's about 20%. In some cases, if your income is lower, it might even be 15%. And if you sell it within less than a year, then it's short-term capital gains, which is 33 to 40%. So you definitely want to hold it long-term, and it's not something you want to trade. Just like even with stocks, when they say don't time the market, it's time in the market.
Right.
Kind of a similar thing. Like nobody, if you right now, 100% of people that bought Bitcoin and held it for 4 years are up money. Nobody has ever held Bitcoin for 4 years and lost money.
Let's get back into the S&P thing and the whole inflation thing. I think you told me it's at like 1.5, barely even made 1.5%.
That's a great question. So I have this chart here, if I could find it. First of all, this is the national debt, right? Okay. Let's just answer your question, right? This is the national debt. Okay. So it's been accelerating the last couple of years, right? So this is like from 1990, and it was going up, whatever, but it's just skyrocketed recently, right? So they're definitely going to continue to print. Maybe this will, this is like a spike. There was COVID, but they're not going to stop printing, right?
What is this chart exactly that we're looking at here?
This is just like the amount that we have to pay in interest, like our interest payments. So they're borrowing so much money that the government just has to, like a credit card bill, you have to pay your interest if you didn't pay the whole debt. So the interest is just going up and up. And the only way that we're able to, since we're at a deficit, so we collect like 3 trillion in taxes, but we spend about 6 trillion, something like that. So it's like we don't even have money to pay the credit card bill. So we borrow more. And by borrow, I mean we print it. So the gold is like, since 1925 is the S&P, right? But the green is the adjusted S&P. So if you take the M2 growth, the chart I showed you where they're printing 7% a year since 1961, if you just take that out of the S&P, so like, okay, the S&P went up 8%, but they printed 7%. So really only went up 1%, like, because they stole 7% of the wealth. So like, if you look here, it's almost flat over like 100 years. You only made the dividends, which is like 1.5%. So you think you're getting 7 or 8% because the number's going up, but all the prices are going up too. So like, you really are only making 1.5%.
You're getting compounded.
Yeah, it's like, yeah, you're pouring money. You're trying to fill the cup. You're pouring in, and you think, oh, the cup's gonna fill up because I'm pouring like this much per year, but then it's leaking out at the same time.
You're just like pushing a boulder up a freaking mountain, right? Trying to get it up there.
Yeah.
Bitcoin versus traditional currency, and let's talk about Venezuela.
Nah. Okay. So Venezuela is a sad story, right? They have 7% inflation per week, not per year. So what they do is they run and buy dollars. They operate on a dollar, pretty much dollar standard. They get paid in bolivars, and then the second they get paid, they run to the conversion and convert it to dollars. Because yeah, that's a leaky cup. The dollars it's 7% per year. But if you had a cup that leaked 7% per year versus a cup that leaks 7% per week, you'd be like happy to have this cup, right? So every year they add more zeros to their currency.
Grass is definitely greener, right?
Yeah. They add zeros to their currency, and the dollar notes, like the Bolivar notes from last year, become worthless. And you could Google pictures. Maybe you want to add some pictures in here of money in the street, Venezuela. Just Google that. You'll see like just. I mean, I could do it.
No, it's
What do you mean
insane.
money in the streets?
Like money literally just laying on the ground.
Like dollar bills?
Yeah, there's actually a vendor who collects the dollars, and he makes sculptures and he makes little handbags out of the money. Those bags and those sculptures are worth more than the money itself. It's insane.
That's wild. Can you imagine that here in America? Like just money all over the.
It's crazy. Like, here's the vendor you're talking about. This is not a good here, but this guy right here. I mean, yeah, he's making little sculptures out of it. It's garbage, right?
Nuts.
So when people ask me, hey, you're up on your Bitcoin so much, like, why don't you sell it? Like, lock in your gains. And I tell them the story about Venezuela. I'm like, yo, in Venezuela, this is what happens. I tell them the story that you just said. Like, they run and they buy dollars. So like, all right, so they bought dollars. Let's say they got paid 1,000 bolivars, and then they got $100, right? And then next week, since this got devalued, it's worth 3,000 bolivars, whatever, in a few weeks. They're not going and like selling their $100 to get 3,000 bolivars. Like, yo, I'm up 2,000 bolivars. Like, no, because it's toilet paper. Like, so that's why I don't sell my Bitcoin. It's like the dollar is
It makes a lot of sense.
it's just crashing. So here, this is the
I understand why you say don't sell your Bitcoin now.
this is everything priced in Bitcoin instead of priced in dollars, right? Everything is just, that's Apple stock, that's Visa stock, that's Nvidia stock that went up bajillion, that's silver stock, Coca-Cola stock, NASDAQ, US dollar, Tesla, which went up a bunch. But versus Bitcoin, they're crashing because Bitcoin's going up much faster than everything else. That's the 10-year treasury. That's the Vanguard real estate fund. That's gold.
Some of these companies are doing really well
That's
for
the S&P
themselves.
500, yeah. So
But just compared to Bitcoin,
Berkshire, you know, Warren Buffett, he can't beat the performance of Bitcoin, the best investor in the world.
What's Warren Buffett's stand on?
Oh, he hates Bitcoin. He hates it. Him and his partner Munger called it rat poison.
He's just a traditional finance guy, right? Like old school.
He's old school. obviously you wouldn't ask your grandpa about, technology, about what the next iPhone's going to be. But also rats hate rat poison. He's a rat and he's calling it rat poison because he hates it. It's going to kill him. The automobile manufacturers, I bet you horse and buggy people weren't like saying, oh, the automobile is great because it's going to replace the horse and buggy. So they were saying, oh, the automobile is dangerous. It's expensive. How you shouldn't. It's dangerous. Like, it's the same kind of concept.
They were in fear for the market. They were in fear for their gains.
Yeah, bankers hate it. And the best, not the best part, the most interesting part is like, especially for bankers, right? Because they think they know a lot about finance. Bitcoin's not an IQ test. I mean, it's multidisciplinary. You have to study cryptography, history, macroeconomics, game theory, technology, to understand it. So it does take a lot of hours to really, and I don't fully understand it. And I've done...
It's like 5 subjects you need to really study before you can really even grasp what Bitcoin really is what you're saying?
I mean, no. So different people have different amounts of time because some people know history already. Like if I tell most dads about, like, they know about the Roman Empire, they know that they debased their currency and they clipped the coins, so they understand that, but they don't know the technology part. So everyone has to fill up their bars, kind of like a video game character, of different things, but you need to fill those bars to a certain level to understand it. And like, so what I'm saying is the different levels of IQ, people have to do less hours of research. If you're smart, you might get it in 15 hours. If you're a little slower, it might take 100 hours, but it takes work. But you have to accept that everything you knew about money was wrong. And it's an ego test more than an IQ test. And the finance people who make a lot of money, it's hard for them to accept that, even though you get paid a lot, you were wrong about all of this your whole life. You were just close to the money printer. And like, that's what made you rich. Not that you're a genius. You were in the rigged game and you were on the team that was rigging.
It goes back to the basketball court, right?
Yeah.
You're calling fouls and they're not.
Yeah, and then they're like, we're so good. Yeah. Yeah.
Yeah, for sure. So let's talk about, you made an interesting analogy last time we spoke about the gunpowder.
Yeah, okay. So I think I stole this from Safedine again, but adopting Bitcoin is not an option. So these financiers that are like big ego and like against it, they'll still be forced to adopt it. That's the best part, even though they don't want to adopt it, because if not, they will perish. So like when gunpowder came out, some people were blowing their fingers off. It was dangerous. It was new technology. It was unproven, but it was much more powerful than swords. And some armies were like, we're not touching this. We have tradition. We know what we're doing. Listen, don't teach me about how to fight. We have knights. You guys play with your powder, right? And they were conquered, and
by those that used
the gunpowder. Yeah, because it's not even comparable. It's too strong.
It's like when they say you're gonna bring
a knife to a gunfight. Yeah, a sword to a gunfight. Yeah. So, like, then they had a choice, right? They could keep their big ego and keep their swords after they lost the first battle, or they could be like, listen, this is a strong technology. We need to adopt it. So there's going to be people that fight it to the bitter end, and they're just going to be conquered by those that adopt it.
You want to show up late to the Bitcoin party. You want to show up too late.
And you're not late. Like, everyone thinks they're late. When it was $100 and it went to 1,000, the people are like, I'm too late. And then when 1,000 and it went to 20, everyone's like, I'm too late.
We're still in an early market here, you would say, for Bitcoin?
I would say we're right past the trailblazer early adopter stage. We're about to jump to like early adopters. Like, so I would say we're probably right about here, right? We're somewhere in here, right? Some people say this is the chasm that people speak of crossing the chasm. This is the hardest part when there's a new technology, is to get from early adopters to the early majority. Some people think that because the price is so high or whatever, but really, in terms of percentage of the world that owns Bitcoin, it's still an innovator stage. It's still very small percent. Maybe 2% of Americans own it, but around the world, it's not.
We still have time.
You have so much time.
Even for what is valued at now at 65. Okay.
Yeah. It's like 69 or 70, yeah. But either way,
So you're saying the hardest part is to get from the early adopters.
to the early majority. And we're not in the early majority yet, so you're still early.
When are you saying in this graph here, where are we too late to Bitcoin? Once we get to the 16%?
Laggards, yeah, exactly. These are the guys where everyone's using gunpowder and they're still like, no, swords. Like,
Still. All right, where, in what year?
uh-huh.
Now, obviously,
Yeah.
you know, we can't draw a concrete number.
Yeah.
What year would you say we get to that 16% or closer to like late majority?
I think probably another 7 or 10 years. So typically, like if you look at reserve currencies, like the world reserve currency, the currency that most of the world used, and what country owned that currency since 1400. And typically they last like around 150 to 200 years, right? And right now the US has had it for about 150 or 200 years. And it usually ended in collapse or like the empire fell or whatever. But the transition period, something like 30 years. So we're in year 15 of Bitcoin. So I think it takes another 15 years. But most of the gains will happen already in the first 2/3 of that, right? And then there's going to be some people like lagging. But so we're in year 15, but maybe we're not really in year 15 because the first 5 years were like the Wild West. It was not serious yet. So maybe we're in year 10 of 30. So it's going to take another 20 years. I think in 20 years, when you go to the grocery store, the prices will be in Bitcoin and not in dollars.
And I think you were telling me that that's possible, right? You go to the supermarket and you're going to see
Sats, not
100%.
Yeah, Satoshi.
Yeah, you're using a portion of Bitcoin versus using an entire Bitcoin. So imagine you want this banana, it's going to be 5,000 Satoshis a pound, or probably won't be that.
No, not even. I think it's going to reach parity with with 1 cent will be 1 Satoshi. So, so it'll be like 500 Satoshis, like $5. Yeah, whatever.
those are like the ratios.
So each Bitcoin is divided by 100 million Satoshis. So like it has 8 digit points. Like you don't need to buy a full Bitcoin. For those listeners, you could buy $10 of Bitcoin. You don't need to buy $70,000 to have a full coin. But I think in the future, being a whole coiner is kind of like being a millionaire, right? You don't need to buy $1 million, but being a millionaire will mean something. Being a whole coiner will mean something, but that doesn't mean you can't use the money if you're not a millionaire. Like you could buy pennies. It doesn't matter. There is something to keep in mind. If you are going to invest in Bitcoin, to learn about like UXTO management.
What was that?
So like if you're going to operate on the base layer instead of using like a layer 2.
That's
so
getting back to the layers of Bitcoin. Right?
Yeah, so back to ETFs. Maybe if you're starting, you just want price exposure to protect yourself from inflation, and you're not great with technology, you're very early in your journey, you could buy the ETF, even though that's not what was meant to be done, but at least you'll protect yourself a little from the inflation, and then study it for a few months, right? And then when you're comfortable, get a wallet. Maybe even get a wallet in the beginning, very early. Send $5 to the cold wallet. Just get comfortable with using it. And then when you're comfortable, really put the money in cold storage. But essentially, when you send money to a wallet, you have what's called an unspent transaction output. And I don't want to get like too crazy technical, but it's kind of like a bill. You know how you have a $5 bill, you have a $20 bill, a $100 bill? Whatever you send to that wallet is that dollar bill. So if you send $150 to your wallet, that's a $150 bill. So later, if you want to transact on the base layer, there's always a fee. If the fee is $1 and you're spending $150, it's not that bad. And if it's $1,000 and you spend $1, even better, right? But if you want to spend $3 on a coffee and you have a $1 fee, that's pretty significant. And if you want to buy something for 50 cents you just can't because you have to pay $1 fee. So just be cognizant of, don't send very small amounts to cold storage. Like save it up in your exchange till you get $1,000 or $1,500, then send it to your wallet. Just basically the base layer is where the most trust is, and why the reason it's slow is because it's the most secure. We've traded speed for security and absolute uncensorability, immutability. You can't change it. It's set in stone forever. Nobody can change the rules. That's why it's so. But layer 2 and layer 3, like the ETFs, Lightning is layer 2. The ETFs, I would say, are layer 3. It's fine to transact. You don't have to be a purist and be like, I'm only going to be on the base layer. Like, it's fine. Just start learning about it and really just use it as a tool to not get robbed from. Like, use it to avoid the inflation.
What's the fourth layer?
I mean, there's apps on top of it. There's smart contracts. Just like a lot of these altcoins, talk about smart contracts. They also exist on Bitcoin, but it's a little bit like a problem in search of a solution in search of a problem. We need smart contracts, but we're still humans. Right now, we still use courts of law. We don't have, police enforcement or online rules being enforced by a code. Maybe when AI is more advanced, we'll have that. So it's still kind of the Wild West and a laboratory, a playground with these smart contracts. So I don't think it's really important. I think most important is to just get off zero. Don't have zero Bitcoin, because then you're the guy without the gunpowder.
Right. Yeah, you don't want to be that guy.
Yeah.
What is custodial and non-custodial?
So like whoever's the custodian of your Bitcoin is who's holding it. So like if there's like the ETF, I think, is non-custodial. So you pay BlackRock to go get you Bitcoin, and then the way these ETFs are set up, they're not allowed to hold it themselves to get like some more protection. And the stock market made these rules where, okay, so now BlackRock goes and buys it for you, and then Coinbase holds it for them. So now there's like 3 parties, and like to move it, everyone has to agree. I don't think it's really important for people to understand like the nuances of custodial versus non-custodial.
We don't want that. We don't want Bitcoin in that matter, right?
Not at all. What's the point of getting into these ETFs if you don't actually hold it? The whole point of Bitcoin is to hold your own keys.
It's good as an introduction, but like he said, we're not going to be sovereign as humanity if we don't take responsibility for our own money and hold it ourselves. So that allows things to happen, like Bernie Madoff, like...
If you do the BlackRock thing, right?
Yeah.
You're going against what Bitcoin stands for.
Yes, but again, like, if your grandma is going to lose the coins, what's better? Protect her for inflation in this non-pure way, or have her lose her coins, right? So like, I get it. I would never tell someone who can operate like an iPhone app to do that, but there's some people where that's appropriate for. So I'm not going to say that there's no use for layer 3, but again, it goes against the ethos, and then like it enables scammers like this guy Sam Bankman-Fried, the guy with FTX who stole all the billions of dollars.
They just gave him like 25, right?
Yeah, they gave him 25 years in prison. The reason is people trusted him with their coins, and they put the coins on his thing, and he gave you an IOU. He just, a number on a screen. It said, I have this much Bitcoin, but then he just gambled it all away. So like, if you have the coins in cold storage, nobody could do that to you. Nobody can touch it. If they don't have your magic 12 words, nobody can move those coins. Even layer 2, there's some level of trust, and each layer up, there's more trust. So the ETFs are more like layer 3 and 4. It really depends which one. So like Fidelity has a layer 3, whereas BlackRock's layer 4, because Fidelity does hold their own coins. They created a solution where they're putting their coins in cold storage. So Fidelity is probably the purest ETF of them all. Yeah, but I mean, there's also the fees, so you have to decide.
So now mining, right? Because to me, like I never understood like where the Bitcoin came from.
Mm-hmm.
Like, how do you, like, where does it get created? You know what I mean? I never understood that. I understand more now, but for everybody at home,
mm-hmm.
where do people generate Bitcoin from, right?
So the way it was set up is there's this dance between the nodes, which like are the network, and the ones sending transactions and confirming them, and they need the miners computational power to do these transactions. So there's kind of two ways the miners make money. One is by securing the network, and there's like a lottery. So every 10 minutes, there's this big haystack.
Okay, wait. So what is a miner?
A miner is basically just a machine that solves math problems.
So in your house, you have a machine that's just solving algorithmic math problems?
Yeah, I mean, that's simplifying it, but it's providing security to the network is why it's solving those problems. It's not just like doing it for fun on a chalkboard. It's doing it so that the network is secure.
Because the Bitcoin isn't just falling from the sky.
No.
Yeah, so every time, right, there's a lottery, and the more power you give to the network, the more tickets you get in this lottery. And the way these math problems work, it's kind of like a needle in a haystack. They're all searching for the needle, and by the action of them searching is what's securing the network, kind of, right? So they're sifting through, and the more sifters you have, like the more power you're putting towards the network, the more likely you're going to be the one to find that needle. And that needle is 50 Bitcoin the first 4 years, and every 4 years it gets cut a little. But that's the mining subsidy. That's the reward of, how Bitcoin gets paid to the miners. And then the second thing is once they find that needle, they package all the transactions from the last 10 minutes that the network, like when I want to sign my coin over to you, we put it in that block, whatever. The needle they found is actually like a block. And we encode all the transactions from today or from those 10 minutes into that block. So we also pay, there's like an auction, and it's kind of like there's a bus every 10 minutes, and there's a limited amount of seats. And I want my transaction to be on this bus because I need it to happen now. So I'll pay $1.10 to get to the front of the line. And you're like, I'm willing to wait 20 minutes, so I'll pay 90 cents, or whatever. And then you get into that bus, like that little package of transactions. Once the auction is over, the transactions go in that block and they're locked there forever. It goes into the blockchain, and then we have that history for the rest of time. You can't erase it.
So they say that like mining, like it requires a lot of like power, right? A lot of energy.
Yeah.
That's the narrative, right? Is that true or?
I would say so, because these companies are buying up these warehouses, and like he said, with one, the more power you have, the more chances you have of actually getting that block and confirming those transactions. So you're gonna get the reward the more you have.
As far as hardware, right? Hardware.
Yeah, hardware itself.
What does my computer need to be able to mine Bitcoin?
So in the early days, you could do it with a regular laptop.
4 gigs of unified memory.
It's not going to
40
do
core
it.
GPU and
So as time has progressed, we've invented specific chips. They're called ASICs. It's like specifically for like that are more efficient at solving this specific kind of
they're
computation.
catered to Bitcoin mining.
Yes. So you would need specialized hardware for it. There's a big market for it. There's a lot of different manufacturers of them. It's just like any, special chip that's made for an industry. There's car chips, there's this kind of chip. So this chip is made for Bitcoin mining.
Let's take it back to like the beginning. Have you ever mined?
Yeah.
Did you ever get into mining?
I've mined and I've lost money mining. It's a very cutthroat. I did it kind of as an experiment.
Can you share like what that process is like a day in when you used to mine, right?
Yeah.
What did you used to do?
So I bought a machine for like $10,000,
Okay.
and it would create something like $20 a day of Bitcoin. Like it would. So when you're such a small miner, you pool together with other miners because your chance of finding that needle is so small. So what you do is you get a bunch of miners together that you all agree, hey, we're all going to search, but if any of us finds it, we're all going to split the winnings. And that way you have a much more stable way to earn for mining, because you're not playing a lottery. You're just kind of getting a stable amount each day. And that $20 a day, my electricity costed, $15 a day. So I was making only $5 a day. And then there's other expenses. And then the difficulty goes up. And all of a sudden, now it costs me $22 a day of electricity, but I'm only getting $20 of Bitcoin. So it's a very cutthroat game. And there's actually, the energy side is one of the most interesting parts of Bitcoin. So I think, and many people in the Bitcoin space think, that it's going to revolutionize the energy industry for the whole world. So the way Bitcoin works is, the incentives are the cheapest energy. Like as a miner, you're incentivized to go find cheap energy because it's basically whoever has the cheapest energy is going to get the most rewards. They can run the most machines and they could sift the most.
The profit margin.
Yeah, so they're looking so they basically are incentivized to find green, sustainable energy anywhere they can so that they can mine Bitcoin.
The cost of operations is lower.
Yeah, and it also makes it so that if you have inefficient energy, those people die off, like me. Like I was using New Jersey residential, right? I was just doing it as an experiment. But the people that are in Iceland using like volcanic, energy, it's like nothing for them. So they're the best miners,
They're
right?
really getting that bang. Yeah.
And what's even more like impressive and amazing, like for Bitcoin, is that like a village in Africa, right? In the past, let's say they wanted to make like a hydroelectric dam, right? You couldn't do that because you needed 20,000 consumers of electricity, but there was only 5,000 people in that village. So then the power plant company would be like, well, we're not going to build a hydroelectric here because we need at least 20,000 people or else it's not profitable for us. But now they can build that there, and the excess 15,000, units of whatever energy usage that people would have, they could just mine Bitcoin. So it's going to decentralize green energy all over the world because now you can create green energy where it was previously not profitable. And then as energy becomes abundant, we can turn off the dirty, inefficient ones. But like right now, if it's not profitable, no one's going to build it. But now that it can be profitable no matter what, people will build out green energy.
When would you say mining got really harder to get into?
I think it's always been pretty hard because there's this process in Bitcoin called the difficulty adjustment. Bitcoin is meant to operate at a speed of every 10 minutes a block is found. So if too many miners were coming online, they would find it every 5 minutes instead of every 10. And that would kind of wreck the whole, we're all agreeing that we're doing this every 10 minutes. Like we're trying to build kind of a banking system for the world. So we have to have it on a clock. So there's an adjustment every 2 weeks where it automatically algorithmically adjusts the difficulty so that the amount of miners that are plugged into the network, it will bring the average back to 10 minutes. And, we could do a whole podcast about that. It's an important part of the invention of how he solved that problem. But like, I don't think I'm going to be able to explain like how that works technically.
Right, absolutely. So this guy Satoshi really had this all thought out, man.
Oh, he's a genius. And I think one other important thing to note about the energy is there's a lot of mud being slinged by bad actors saying like Bitcoin wastes energy, it's like killing the planet, and it's very dishonest. So like whenever someone says that to me, it's pretty easy to shut them up. All I got to do is ask them if they have a drying machine, and they'll be like, yeah. And then I'll be like, you have a drying machine? And they'll be like, yeah, I have a drying machine. I'm like, you know that around the world, drying machines use more energy than the Bitcoin network. And they'll just look at me blank, and I'll be like, yo, you're killing the planet, bro. You're evil. Like,
wait, so what? So why does everybody always say it costs so much energy?
Because in their mind, right, they're tyrants, right? They're saying like this has no value to society, but like we have a free country, right? I'm allowed to use energy on anything I want. Because like them saying that is like AI is using way more energy than Bitcoin, but everyone loves AI. It's just like the people that own the newspapers and the financiers, they're trying to find any way to denigrate Bitcoin to make it seem like, oh, it's not green, it's not this, because they have an agenda, right? But we have a free country where would you like it if in this country someone could say, I'm going to make a rule to where how you could use electricity that you pay for in your house. Like, oh, you're only allowed to watch half an hour of Netflix because it's not healthy. So once you used up that much electricity on your Netflix, you're not allowed anymore. Like, no, that's not free country. Like, we want to use our electricity to avoid inflation, to protect ourselves. Like, screw you. Like, this is just, it's bullshit. That whole, it uses energy. It's completely dishonest.
Yeah, because that is the narrative. Okay, so would you said you could talk about mining forever. So let's not.
Yeah.
We could do a whole podcast just on mining.
Yeah.
Let's get back into the advantages of Bitcoin, right? It can't be manipulated. It can't be controlled.
Mhm.
Governments, corporations can't. There's no CEO and a board.
There's no office to raid.
Right.
It's decentralized all over the world. They cannot ban 12 words. They can't ban wind coming out of our throat.
Let's go to that story, E, that you had mentioned about there was a guy, I think, stranded somewhere or something like that, or he was held hostage.
Ukraine. So when the war began in Ukraine, they were doing drafts to draft the young men, or the men in general, military-aged men. So this guy, I believe Zaidi was the name that they gave him, $2,000 of Bitcoin that he had managed to save up, and he used it to cross over to Poland. So he essentially avoided a death sentence just holding on to Bitcoin.
Just holding on to the code. Right?
Yeah, that's amazing in the fact that even though his government said this is what has to happen, with Bitcoin he was able to negate that.
Right, he was able to challenge them.
Yeah, and that's honestly alone one of the most powerful things.
Yeah, that's crazy because you could be stranded somewhere, or you could be held hostage, and you have negotiation.
You have power.
Off of just saying, "Oh yeah, I have a wallet with X amount of Bitcoin, and only I have the code to it. If you want it, what are you gonna do? You know what I mean? Can't take it from me." What is CBDC threat?
So the central bank digital currency. So a lot of countries are, China already has this. It's like the perfection of money and the social credit system. So like, if you were a bad boy, if you said something bad about the government, or if you jaywalked, they just take it straight out of your wallet. Take the fine. You don't even have to like go to court. They just take it out. So it's basically like the bank controlling all of the money in your wallet and watching what you can spend and giving you an allowance and
rules. So say you go to the supermarket, you're only allowed to spend $20 on meat this week.
Yeah.
Or gas. Oh, you went over your limit on gas. You can't have any more gas for this month. The power it gives them, it really is slavery.
So now, I don't know if you guys want to get into conspiracies. I usually don't talk about conspiracies, general politics on the podcast. But what is a conspiracy that this country wants to adopt? The social score thing, 2030 plan.
Yeah. So without getting into the 2030 agenda thing, it's definitely going in that direction. I mean, we have credit scores, and if you do research this, a lot of like you already do have a secret kind of social credit score with like companies that won't open an account for you if you say stuff online, if you have certain opinions or whatever. And even normal people, like if you look at Canada, forget our country for a second, like the truckers, when they had a trucker protest, there was some green laws that the truckers were like, this is going to put us all out of business. We're the ones delivering the food. Like, you can't do this. And they had a protest in the capital. And Canada froze the funds of anyone who sent money to them. Like, grandmas that sent $20 to these guys to, like, support them, they just froze their checking account. Like, you can't buy groceries. Like, you're a terrorist. Like, so, all right, Canada. But it's happening in many countries. And America wants, this is like the wet dream of the government to have this level of control, like he said. So Bitcoin takes that away from them. Like, if everything goes in that direction, I can still pay you. And if you grow cows, I can still buy a steak from you. and nobody could tell us no, because that's just between me and you. Whereas if we all just agree and put all our money in this digital control system, then they could just tell us to do whatever we want, or they shut off our life. So it's terrifying. I think Bitcoin is definitely the solution to the CDBC threat. I'm hoping. I think America is still farther away from China. Like our spirit is still very free, and like we don't just take people taking our freedoms away too easily. Like just look at the gun thing. Like,
Yeah, I was just about to say that.
I mean, so I have more optimism because of Bitcoin. That we're not just going to take it laying down.
I'm trying to stay far away from communism, man. I come from a communistic country.
Yeah.
So I don't want to know nothing about that. And that's what that sounds like to me. All of that. Socialist colorism.
That's exactly what it is. Yeah. For the good of everyone, we're going to make these rules for you.
Yeah, right.
Yeah.
So let's get into personal experience, right? And thoughts. How early did you guys get into investing in Bitcoin?
Oh, me personally, this is going to be my second cycle. So about 2020, 2021,
What's the cycle?
the Bitcoin halving. So
Bitcoin halving?
yeah, so every 4 years, Bitcoin goes through this adjustment where miners receive less rewards. I believe about half. Yeah, about half.
Halvening, the halving, people pronounce it differently. I'm not sure what the right one is. Halving or halvening. Or no. Okay, so this no. The halvening is like the event which it marks the halving of the reward.
Okay.
So yeah, every 4 years. So 4 years is a cycle, more or less.
And
so we've gone through how many cycles now of Bitcoin since its
Let's
history?
This is going to be the fourth.
This is the fourth now. So
Yeah.
we're wrapping up the fourth now. When is the next
it's
halving happening?
April 20th.
April 20th in a few days.
What's about to happen?
It's about to happen.
Oh, fire. So what do we do?
So nothing. It's just
I don't know anything about Bitcoin, guys.
so like basically every day right now with this sifting, right? When they find the needle, right now currently it's about 900 Bitcoins a day are found. So after April 20th, it's only going to be 450 instead of 900.
And why does the halving have to take place every 4 years?
Because that's the way that the math makes it so that only 21 million coins ever existed. Because if you don't reduce that, then there's inflation because they'll keep getting added.
That's
But
to make sure they're staying on task to that 21, right?
yeah, it's if in mathematical terms there's like an asymptote, so there's like a line that approaches infinity of like the difficulty, or like not the difficulty, like it gets cut in half, and then it gets cut in half from 450 to 225, and then it's going to be 112, then it's going to be 50, then it's going to be 25. Eventually it's going to be like half of a Bitcoin, a point of a zero, like, so it's just so that eventually there's zero inflation, quote unquote.
How early did you get into?
This is going to be my third cycle. I got in when Bitcoin was like $250. I made like a big amount of money, and I sold it because I didn't deserve to own it at that price. Basically, in Bitcoin we have a saying: you get it at the price you deserve. So I traded it back for dollars. Like I made, I was only 25 or 26, and I made like a six-figure sum, enough to pay off my car and my school loans. So I did it, and that gave me a lot of freedom. And also, I was a libertarian. I mean, I still am a libertarian, slash, I don't know what you want to call me, anarchist capitalist, and NCAP. So I knew that people were buying it for the wrong reason, not to free themselves. They were buying it to get more slave notes. It's like, oh, I'm going to buy this, then it's going to go up, and then I'll have more slave notes. Like, so I knew it wasn't really going to succeed back then. And the cycles were so crazy that I thought, like, I'm a good trader. I'm going to sell the top, buy the bottom, whatever. But I'll never have the amount of coins if I just held. So what I tell everyone on this, I tell all my friends, just don't sell. Like when it goes down, that means you have a sale. Like, don't you like sales? When there's something you like, when it goes 50% off, you buy it. You don't like sell when so.
Buy the blood.
When there's blood in the streets, that's when you buy. Yeah, that's the only thing I agree with Warren Buffett about.
do you think for Bitcoin to be fully accepted, we need a whole new generation of economists to kind of, we got to transition from the old heads?
No, it goes back to that gunpowder, right? Some of those old heads get it. They did the work. So tying in my experience, right? At the time, I thought, oh, governments are going to ban it or whatever. So that was my first cycle. Then the second cycle, it went up again.
2009 to,
No, that was like 2013 or something.
okay.
Like,
Your first cycle.
yeah, it was the end of the first cycle or something. And then the second cycle, again, I still kept a few. I was like, whatever, I made 100K, but I'm or whatever, I made like, and I was like, I'm keeping a few of these. Then it went up again, and it got to the level where there was altcoin mania. There was ICOs in the first cycle. Now then it was altcoins, and it was all scams. And the shoe shine boy, the proverbial like the like the forklift driver. Everyone was asking me about it. The coffee shop boy. I was like, this is not. You don't understand freedom. You don't understand like inflation. You're just buying it to get more dollars. And the government's, if this ever like actually people get it that this is a tool to free themselves, the government will ban it or whatever. I sold some to buy a condo. Again, another 6 Bitcoin I'll never get back. Whatever. I had like the equivalent of what was 100 Bitcoin now. Like, but I'll never have that again. I will never, because I didn't deserve it. Then on the third cycle, in 2019, when it still wasn't dying, I still had 1 or 1.5 or something. And I was like, I should just do the work. Like, is this the real thing or not? Like, and then I studied for about 1,000 hours. And then I figured out like, wait, this is the thing. This is our dream. This is our weapon that frees us. And ever since then, I've been all in. So I've been buying every paycheck, just converting it to Bitcoin, like the Bolivar people that convert it to dollars. I save in Bitcoin. I'm on a Bitcoin standard. So I've prospered. Like I got it at the price I deserve. So like my average price is probably more like 10 or 15,000 or 15 or I don't know what it is because I have some coins from when it was dirt cheap. But I'm gonna be buying the top forever. Like I'm gonna buy it. I like this paycheck that I just got. Some money went out to Bitcoin, so I bought it at 70,000 at the top. But in 3 years, when it's in 150 or 200,000 or a million, I'm gonna be like, yeah, I bought it back then too. And so you're never too late. Like if you buy it now, in 2 years, you're gonna laugh when people are like, I can't believe I didn't buy it at 70,000. Like.
So after your trials and tribulations with the Bitcoin, right? Early.
Once I understood it, once I put in the work in Bitcoin, it's so funny because the algorithm is like called proof of work. We've adopted this as like a philosophy that's like a tenet that's important to us, an ideal that people that did the work deserve it at the price that they are now buying it, right? So like I'm not going to trade it back for dollars again because I finally did the work. And Bitcoiners also, we like people that get jacked. We like art that takes a very long time to make, that shows you did work. We like lifting because you can't get big without, it proves that you did work. That's our philosophy, that slow and steady, you're not going to get rich quick, but if you save in Bitcoin, it proves you did the work over those years, you will get rewarded. Yeah.
100%, 100%. How frequently do you guys look at your wallet, your Bitcoin?
Oh man.
I mean, I check the price probably daily, which is not healthy. I mean, sometimes I don't. It's just like in the news, so I see it. But I only check my wallet once every 2 months or 3 months, like, because it comes automatically out of my paycheck. So I don't look at it. It's just like a 401k. You're not supposed to like ride the swings and like, oh, it's up, oh, it's down. Like, I'm just working and I'm just saving. Like, in the long run, it's going to go up.
It's a retirement investment.
Yeah. The half-life aspect. So like we got into this thing of like the cup, how it's leaking. So like in chemistry, you have half-life of a material, right? It's how long until half of it decays, right? So like, radioactive stuff takes hundreds of years to decay, right? And ideally, if you're saving, you want it to not decay. So like the dollar has a half-life of 7 years. So if the inflation rate is 7%, 7 times 7 is 49, right? So if you saved in dollars, after 7 years, half of it decayed, half of your savings, right? So what we had with gold was not so bad because the inflation rate of gold is 1.5, right? So 1.5 is like 30 years to get to 33 years to get to half decay. So you could save up and it would take 33 years for it to decay. So you had time to like do something with it. 7 years is very fast, but 33 years not as bad, but still bad, right? And with Bitcoin, it stays forever. There's no decay. It's just infinite. So infinite half-life, which is amazing, right? And the natural state of humanity is actually deflation, not inflation. So like as technology gets better, producing things gets cheaper and cheaper and cheaper. So like it's typically about 5% how things get cheaper. So then if you just hold a currency and we all hold this currency that's deflationary, we all gain in those productivity gains that everyone's making. So like you're actually, by just holding it, you're gaining 5%. You're just getting richer by just holding it, right? And then, so that's one thing I wanted to say. And then the last thing that's really kind of another thing that makes gold kind of not as good as Bitcoin, because people would say like, you can't hold it in your hands. It's not like tangible. So first of all, I'll say Bitcoin is a physical phenomenon because of the proof of work. It's kind of like energy made into like a currency. So it does have a physical thing backing it. But I will say that gold, it produces violence because when you have a lot of gold, it incentivizes people to come kill you and take it. So I'll just list a couple of examples. Like in ancient history, during like Alexander the Great, he gallivanted across the world. I'm stealing this from Michael Saylor as well because I learned it from him. He gallivanted across the world and he stole all the gold everywhere, right? The Roman Empire, led by Titus, sacked Jerusalem, stole their gold. Rome, led by a bunch of kings, they're known to have 1,000 sieges where they stole gold from everyone.
Guys,
right?
this is, as you can see on the screen, this is from Inception.
Yeah. Right? Like the Spanish conquistadors, they stole from the Aztecs, they stole from the Incas. The Persians stole from Delhi. China, the British and French looted China and stole all their gold. And all right, that's the old ones. But let's just get into the last century. In 1933, Franklin Roosevelt, he told all of us, you have to turn in your gold. He stole over our gold. Australia, the Reserve Bank seized all the private gold. United Kingdom, the British government banned gold and took it all. Mussolini, the evil dictator, stole the gold. The French government, Adolf Hitler, the Soviet Union, India. Like, if there's a gold to be taken, it incentivizes violence. Before paper money, most money was gold. And when a lord wanted to fight another kingdom, he fought and he spent his gold. And when he ran out of gold, when he was losing, he either had to ask his lords to put up the gold to keep fighting, like, hey, this is a just war, they're raping women's, whatever. And in those cases, the lords gave gold. But in the cases where it was just for conquest or something stupid, he ran out of gold and then he just lost and the war would be over. We had very short skirmishes. We never had these big world wars. But with paper money, when the country runs out of money, they print money and they borrow it from the kids, even though the kids don't even pay taxes yet. And then when they run out of that money, they keep fighting, they print money and they borrow it from the grandkids to keep fighting. And millions of people are dying. So like, if you didn't have the ability to print, you could not have world wars. So Bitcoin fixes this. So it's just like, it's the opposite. It doesn't create new problems. It solves all these problems that people don't even understand they have. The health problems. Things keep getting more expensive. Instead of marking the prices up, they put in cheap, seed oils, whatever, to make you unhealthy. I mean, it's not to make you unhealthy. It's just because if they marked it to the real price, nobody could afford it. So if we stopped doing that, maybe we could have healthy food again. It would solve the health crisis. Like, there's all these crises that are just, the best example is like leukemia, right? Like, sometimes there's symptoms in the body and you're just like, oh, my hands hurt or this organ is failing and whatever. And it's like the blood is corrupt. there's a disease in the blood. Like money is our lifeblood. It circulates between all the organs and all the businesses, and we have like an infection of the blood. So if you fix the symptoms in the knee or the organ or whatever, it's just going to come back because the blood is corrupted.
One thing I was always curious is we've lived in a world where we're so used to centralized powers, and we have something like Bitcoin that's decentralized. This is something very new. Can they coincide? Will decentralization take over?
I think there's going to be a concept that there's a guy named Balaji, forget his last name, but if you look up the network state, we're going to move to less geographical central powers to more decentralized powers, like you said. And it'll be coalitions of voluntary people choosing to kind of be on the same team and cooperate with all these decentralized kind of platforms. It could be social media, it could be Bitcoin as a money layer. There's going to be other innovations. Like right now, the biggest one is Nostr, which is like a protocol for, it's kind of like the Bitcoin of Twitter. It's like, so nobody can control social media and like deplatform people. So people are building on this thing called Nostr or Nostr, Nostr. So there's going to be all these kind of new novel decentralized. So it's usually like a pendulum, right? When you had feudalism, you had all these tiny lord and like kingdoms, and sometimes they would come together and sometimes they would come apart. So like humanity, there's pendulums. We go very liberal, we go too far. We go very conservative, we go too far. Right wing, left wing. Same thing with centralization. Like there's some benefits to centralization, but then we went too far, and then it becomes dystopian and like totalitarian. And then we go decentralization, which is probably best for humanity, but you can go too far, and then we don't have the space for specialists, you know, because you need a big population to become a specialist. If there's a disease that 1 out of a million people get, and you have a community with only 20,000 people, you can't be profitable. But if you're in a community with 50 million people, now you have 50 customers instead of, none. So I think there's room for both. And I'm more of a decentralized kind of, I'm a like, just leave me alone, don't make rules for me. But some people, they feel safer in a herd. I don't know. It's like to each his own.
Accustomed to that because we've been through it. Our lineage has been through it for so many years. It's just kind of embedded into our brain.
Well, it gives us meaning. Like we're social creatures, so I'm not like saying everything should be decentralized, but just the money needs to be decentralized because money is power, and if you give it to a central authority, they're gonna be corrupted. Like, so avoid any place that also sells altcoins. Like use platforms that use only Bitcoin. So I recommend Swan and River, because they encourage people to take off the coins off their exchange. So whenever someone's telling you, hey, I'll buy this for you, but you should take it to your own possession, they're true Bitcoiners, right? Whereas if they're like, hey, put Bitcoin on here, but also come to our casino with all these other coins, like that's like they're trying to make money off fees. They're trying to just kind of confuse you. So I like Swan Bitcoin. I like River. There's a bunch of other good ones out there. No, it's swanbitcoin.com and river.com are platforms that you can use to buy Bitcoin. And then you tell them your address on your wallet, and they send you the Bitcoin to your wallet. And the other recommendation is stay solvent, right? Don't gamble. Don't put all in and then you have to sell it, right? Just choose an amount you're comfortable with and just have an auto purchase plan and just don't look at it. Just like your 401k. Just be like $50 is coming out of my paycheck every week. It's just going in here. Yeah.
Are we gonna get into the other cryptos? Because I know Bitcoin isn't the only one that's on the.
I would say like I don't want to like go too hard on the other coins, but they're all scams. Like,
See, how do you feel about?
If I'm being honest, I've made, so maybe, and this goes back to that, maybe if you're saving and putting your money into Bitcoin 4 years ago, you would make all your money. I wasn't doing that initially. I was investing in altcoins. And when I had a little understanding of it, I was more of like on a decline versus increase. But, I've gotten lucky these past maybe 3 or 4 months when everyone's excited for the bull market and they're pushing different AI agendas and narratives. But I'm able to take those gains and move it over to Bitcoin because I know Bitcoin is the superior asset, at least in the digital asset space. But it's very important to talk about the altcoins because one thing is when you're looking at these ads on television or on these apps, they're not advertising Bitcoin. You're seeing Dogecoin, you're seeing Cardano, you're seeing all these other coins. And it's going to be hard for any new crypto investor to actually avoid seeing that.
That's why I said these platforms, right? Go to platforms that are only Bitcoin because the other ones, the analogy I like to give is the airplane, right? We've invented the airplane here, and you have all these advertisements that say, I have the faster airplane, I have the cheaper airplane, our airplane has smart contracts, our airplane does this. The only difference is it doesn't fly. So it's like the other ones, you could say they're like securities. This is what Michael Saylor says. So this is going to be the most charitable way I'll talk about them, right? And I'll give this to them. You're investing in a company that has to perform something. They have to find some kind of product market fit, and you're relying on them to deliver. And it's kind of like buying a stock. Bitcoin is this special thing that comes along once in 5,000 years. And these are more like stocks. That some of them, yeah, you can make money in the stock market. It's more of like that kind of thing. There's a CEO, there's a marketing department. They own most of the coins, like just like the company, most of them own like most of the stock. So they have incentive to pump it sometimes or to do this or that. So, this is like its own thing, Bitcoin, and then there's crypto. Bitcoin is not crypto, and it's very confusing, and it could be like sound similar, but they're just two very different things. Because the main thing is the enforceability. The other ones, you're trusting humans to not change the supply or the rules when they've already shown that they can change the rules. Whereas with Bitcoin, nobody can change the rules. I mean, Bitcoin, we have a saying, don't trust, verify. So like anyone who runs a Bitcoin node can look at the code and see, oh, it's set in stone. It's never going to be more than 21 million. With these, somebody owned, like it's sitting on it, like even Ethereum, they've changed the rules. This is the second biggest one. They've changed the rules multiple times. Solana or whatever, which we call Sequolana, it's just a database that sits in Amazon Web Services. So like if Amazon wants to shut them down, they could just click and the whole thing goes away. So it's like,
it gets shut down regularly too.
Oh yeah, it gets shut down every 2 months because it's like it crashes.
It was just shut down last week.
This week it's had 75% failure rate, but it's I don't know. I wouldn't save my money. So like the main thing is like these trades have a horizon. Like yes, some of them can pump a short wick and whatever, but it's kind of like scratch offs. Like yes, some of them can, scratch off you can win $1 million, but like it's not a good investment. And you can, if you're very good at timing, if you're a good trader and you have insider information, you can make money in altcoins. But your time horizon is like a 3-month trade. Like after it wicks, you have a few weeks to like get out. This is not like a 401k where you could just save money for the long run.
So how do you feel about certain people that have made short-term capital gains using cryptocurrency, not Bitcoin?
Well, like I said, it's you're trading. You can make money trading, just like you can make money trading in stocks. But most of the most successful stock investors, like Warren Buffett, he's a buy and hold guy. He's not a like in and out guy.
Yeah. After that conversation the other day, of course. So after that conversation the other day, yeah, definitely. I just completely took my portfolio of 20% Bitcoin and 80% altcoins. And I said, okay, let's put 75% Bitcoin, 25% altcoins.
So we had a meeting, right? Can I bring this up?
Yeah,
Or no?
sure.
The text you sent me?
Which
The text
one?
message you
Yeah,
sent me?
yeah, go ahead.
Bring
It
up?
doesn't even.
We had a meeting, right? And then after the meeting, the day after, he sends me a text. And, it was all three of us on a group call. And this is the text he sent me, bro. He says, hold on. He says,
You humbled me. You humbled me because
yo, this is the text. He says, yo, I've been up all night thinking about
Yo, I love it. I love it.
I think you and
Yeah.
Maximus should go ahead with the podcast when it comes to Bitcoin knowledge. I agree with him as far as his opinions on it and all of that. But this guy made me think and rearrange my whole portfolio.
I'm happy. I'm so happy to hear that.
it's like you humbled me and brought me back to reality on the reason why I got into crypto in the first place, and it was decentralization. You get into crypto and you see all these pumps and you're just chasing one after. When you make money, you're not going to want to stop. You're going to want to keep going, and to do it on bets that are not even 50-50 most of the time, it's a waste of time and it's a waste of energy, because all that time and energy I was putting into these altcoins, I could have just put it into Bitcoin and just made a lot of money doing it that way versus my way.
You don't have to trade and watch it and think.
No.
You could spend time with your family instead of you have to watch it, because if it crashes, they move really
Yeah, the timing is really weird. You can, if you've been in a few of them I have some coins I've been holding them for 6 months, some 2 years, and you get the psychology of how it moves. Every not a majority of the coins have the same characteristics when it comes to moving, goes up, goes down. But you get the hang of the little. You look at the weekly chart, the monthly chart, and you kind of see the trend that it's going into. And I'm not gonna give up my altcoins. I'm not gonna leave the casino yet. But I'm not leaving the casino. But Bitcoin should be everyone's main objective. It shouldn't be altcoins. Don't gamble. Solana is terrible.
I think we made some great points. I think we all understand what Bitcoin is. I appreciate you guys' time.
Of course.
And don't forget, everyone, HODL. That's the most important thing.
Don't sell.
Hold on for dear life. Just buy it and
Bitcoin, don't ever sell it.
And buy the blood. Don't be afraid of the blood.
That's when you buy. Yeah.
100%. All right, fellas.